Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And just a note for you who are, those of you who are not Bookmap Discord members, it is a great community. There's a wide variety of content there on stocks, options, futures, crypto, and also in a wide variety of languages. I'm also on X, formerly known as Twitter. My name there is at Doug Pless. And one of the setups that I talked about yesterday in NQ and QQQ, I did post that on Twitter yesterday evening. If you're active on Twitter, please take a look. If you like it, give me a like and a follow. And I did also post that in Discord yesterday evening. So again, X, I'm at Doug Pless. Here are the key tenets to my approach for trading. First of all, options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks that I follow, as well as the equity futures, the S&P 500 and NASDAQ. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and ES is a derivative of SPX. So when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. Same for the NASDAQ 100 index. The NDX is the underlying index. QQQ is the ETF version of that index, and NQ is a derivative of NDX. So when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset. And for example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord, as well as the chat in YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. And hello, Naral. Welcome. Glad you're here. I hope I didn't pronounce that too badly. All right, here's my agenda for today, Wednesday, February 28th. First of all, I want to cover news items for today as well as the rest of the week. I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's start with economic data. GDP, the second quarter, the fourth quarter, second estimate came out today, and that was slightly less than expectations, slightly less than the previous number. All right, then for the rest of the week, Thursday, the big number for the week is the PCE data at 8:30 a.m. Eastern Time, and then on Friday, manufacturing PMI at 9:45 and 10 a.m. Also, consumer sentiment comes out at 10 a.m. And note the jobs report that is normally on the first Friday of the month. It looks like that has been pushed back to to next Friday, not this coming Friday, but next Friday. All right, let's move on to positional analysis now. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. And just a quick note, here's the reaction to the GDP data, kind of up and down. That was at 8:30 a.m. Eastern Time. All right, so again, this is the ES Futures and Bookmap. And before I take a closer look at this chart, I do want to take a look at a larger time frame. I'm going to go to the underlying index, which is again SPX. And this is a one-day chart for SPX. The current rally began last year, October 30th. So far, SPX from that date has rallied just a little over 1,000 points. So about 1,000 points in 4 months for the SPX. All right, so that's a one-day chart. Now let's zoom in a bit, sticking with SPX. Let's take a look at a 1-hour chart. So this is the upper portion of that rally. This is the trend line that I showed in the one-day chart. That's the upper end of it. And the high right around 5,111. All right, let's take a look at some expiration responses. So this is the January expiration, Friday expiration. SPX broke above 4,800 at that time. Here's the February expiration, and that was Friday, February 16th. Call dominated expiration, typical behavior, a little bit of consolidation after that expiration, and then NVIDIA reported earnings and sent the SPX up over 5,100. And during this year, the call walls for SPX have moved up from 4,800 around the beginning of the year to 5,100 now. That is the current call wall. I'll talk more about that in just a moment. All right, note, I want to show all of the levels on this chart, so I can't zoom in because the put wall is down at 4,500. All right, so I'm going to take a look at the levels on this chart now. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. I update that once a week. That's based on the closing price on Friday. And those levels remain in place for the entire week. And then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market. That's based on the closing price from yesterday, and I update those levels once a day, and I post the lower and upper daily and weekly expected move every evening in Discord for the coming day. All right, the other lines on this chart are Spotgamma levels. These are proprietary Spotgamma levels. They're based on gamma-weighted open interest provided to Spotgamma subscribers on a variety of trading platforms. This is Thinkorswim. I'm going to point out the key daily levels. And hello, rainy days. Welcome. Glad you're here. All right, so first of all, there's the put wall at 4,500. That's a strike with the largest net negative gamma that can be expected to act as support. And the next level up is 5,000. That's the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. Up above that is the volatility trigger. at 50.65, and that is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. So in a positive gamma environment, I'm looking for more range days, mean reverting price action, SPX and S&P 500 trading at a range. Below that level, I'm looking for a wider movement, more trend days. And note that we'll take a look at this in just a minute. Gamma notional for the S&P 500, NASDAQ, and Russell 2000 at the beginning of the day was all positive for today. And the next level up is the call wall that I mentioned before. That's a strike with the largest net positive gamma that can be expected to act as resistance. And so far, that level has done its job, acting as resistance. All right, there was only one minor shift in level, and that was the volatility trigger just shifted down 5 points, so not very significant. Otherwise, the put wall, call wall, and absolute gamma strike all remained at the same level from yesterday. So no, the only shift in levels, again, for SPX was a minor shift lower. All right, let's wrap up our view of SPX, this time with a 1-day chart, a 1-minute chart. So we can just look at the price action for today. Key levels in play for today. Is the volatility trigger at 50.65. Did act somewhat as resistance earlier today, and then this 50.75 level acting as resistance. We'll take a closer look at that in just a minute to see what that level is. All right, so SPX bullish today, trading at a pretty narrow range. All right, let's go to Bookmap now. So there's that 50.75 level. Spotgamma stopped labeling some of the levels in the Thinkorswim chart, so I do mark that on my chart. So what I'm showing here, these are my own cloud notes. So I can show the SPX levels. There's that 50.65 volatility trigger that was noted as support in the Spotgamma AM Founders Note. I'm also showing SPY levels. Here's the SPY 506 volatility trigger. Same as yesterday. And here's a key level, the SPY 505 put wall, acting as support and good entry point this morning for a very nice long, just before 10 a.m. We'll talk more about that in a few minutes. All right, so those are levels in play for today. Again, I'm showing SPX and SPY levels with my own cloud notes. And note there is a price difference between ES and SPX. And today it is somewhere around 10 to 10.5 points. So ES minus SPX equals, I'm using 10, and it looks like it may be closer to 10.5 now. That's what I was using a couple of days ago. And that number does get smaller and smaller as the contract rollover approaches, the quarterly expirations. All right, so I'm using 10. So I'm showing the 50.65 SPX volatility trigger at ES 50.75. And note, I do post the index relationships that I'm using every day. I post those in Discord. I try to post the preliminary numbers by 9 a.m., around 9 a.m. And then when the market opens, that's when SPX and NDX start trading, and I can post the final numbers. And it usually takes some time to settle out, so I post the final numbers around 10 a.m. All right, Neural asks, do you update those cloud notes daily manually, or is it auto from an Excel file? So it's a combination of both. So here's what I do. I use an add-on in Bookmap called Price Lines, not Price Levels, Price Lines. That is an add-on that you have to pay for. And then what I do is I fill out this spreadsheet. Not all these levels are active. So here are my SPX levels, for example. So I just fill out the spreadsheet every morning and then refresh the levels in Bookmap, and it displays the levels I want. So it displays the labels over in the column, and it also draws the lines. And you can select the colors and the line type. All right, so I hope that answers your question. That's how I do it. So it's maybe semi-automatic. At least I don't have to draw the lines and place the labels manually, but I do fill out the spreadsheet. All right, shifts and levels. Again, SPX, volatility trigger just 5 points lower. And for SPY, the put wall shifted higher to 505, and the call wall shifted lower to 508. So a pretty narrow range between the potential floor that acted as support today and then the call wall at 508, the potential ceiling for price. All right, let's move on to NASDAQ. And note I did have a problem with rhythmic data this morning. Maybe I made a mistake, but I did close out Bookmap, opened it back up, and rhythmic data started working again. So I lost some data. Also the MBO data, market by order data that Bookmap uses to show stops and icebergs, that disappeared. So I didn't get my MBO data until about 10 a.m. Normally I open Bookmap around somewhere between 6:30 and 7. Yeah, Steven says a lot of people had rhythmic connection issues. It was not me, not Bookmap, it was rhythmic that there was a problem. So anyway, I chose to close Bookmap and start it up again. So I did lose some data as well as the MBO data before 10 a.m. All right, so this is the NQ futures of Bookmap. And before I take a closer look at this chart, I do want to take a look at the underlying index charts. Going to go to QQQ. So QQQ trading at a very narrow range today, somewhere between the 435 level and the 436.0 gamma level. And yesterday, this 435 level was the support level. That was 0 gamma yesterday, also a large gamma level, and also the support level noted in the Spotgamma AM Founders Note. It was also noted as support today, and that was yesterday. QQQ respected the round number levels and the Spotgamma levels very well, not so much today. It's kind of the opposite today. The S&P 500 was choppy, very choppy yesterday, not really respecting levels, and today it is respecting levels, and NASDAQ not so much. So it's not every day. But anyway, yesterday that post that I posted it on Discord and Bookmap, and in X, Twitter, showed 435 as clear support for a long early afternoon. All right, so that's QQQ trading narrow range, generally somewhere between 34.5 and 36.5. And the last time I looked at NDX, there were no levels in play. Let's just take a quick glance at that. No levels in play for NDX. All right, so again, this is the NQ Futures and Bookmap. All right, thank you, Stephen, for posting that link to price lines. And Adirad asked, do I trade futures or options? And if so, your reason for choosing one or the other. I generally trade futures and shares of stock. So for futures, of course, you have leverage and less margin requirement. But especially for NASDAQ futures, for example, very volatile, and it's pretty easy to get stopped out. So for NASDAQ, I generally prefer to trade QQQ shares over NASDAQ. It's just a huge contract, very easy to get stopped out with NASDAQ. And for the S&P 500, I do trade futures. I have long-term position in SPY, so I don't want to sell right now. Don't want to buy and sell SPY, so I trade futures for the S&P 500. It's it's not as volatile as I find. It's not as easy to get stopped out in the S&P 500. And as far as day trading options, this is just my approach. I was trained as a premium seller, and it's very difficult for me to just outright buy a call, especially where I have time and implied volatility working against me. But that's just me. I would be much more inclined to buy a put in a negative gamma environment where I think the market is going to move pretty sharply lower, implied volatility to increase. So, but the setups that I'm talking about, if they're advantages to options, that they're defined risk. So you don't have to worry about getting stopped out. You just buy a put or call and let it work, let it play out. And Anurag, I'm not sure I have time for that. Well, I may talk about that a little bit at the end of the day if I have time. And hello, Caesar. Welcome. Glad you're here. All right, so this is the NASDAQ. Again, I have my own cloud notes. And here are the two QQQ levels that I've talked about. 435 on the downside, 436. So the 435 large gamma 4 support level and 436 zero gamma level. And note that 437 is the volatility trigger. So QQQ trading below its volatility trigger today, even though at the beginning of the day gamma notional was positive. Also note that this is the lower daily expected move for NQ. So earlier today, NQ did trade below that level. All right, let's wrap up the positional analysis. Take a look at gamma notional. See how market makers were positioned on the gamma curve at the beginning of the day. And this will give us a sense of the expected trading range and volatility for the day. So this is gamma notional, market makers positioned on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. Note all these numbers are positive, so at the beginning of the day, market makers' position on the gamma curve for all these indices was positive. So that indicates for an index that market makers traders are short calls, market makers are long calls, hence the positive gamma, and they have to trade against price to hedge their delta exposure. Note all these numbers did shift higher from yesterday. So gamma notional for SPY, for example, yesterday was slightly negative, shifted to positive today. So again, I'm looking for in this environment, lower volatility, more range day mean reverting price action. I'm going to skip over the Vanna model that I usually look at in a positive gamma environment. It just is not very interesting. Typically the curve is not that helpful. All right, let's move on to positional analysis now. So everything that we've looked at so far, other than Bookmap, is based on static data. Spotgamma takes open interest data that's updated once a day, sometime during the night, and they apply their algorithms to that data to come up with the levels that we were just looking at on the charts. Those charts do change from day to day. Those levels do change from day to day, but during the day they remain static. All right, so now I'm going to move on to the execution process. And we'll start with the S&P 500. So Caesar asked, is it impossible to have a put Vanna rally in a positive gamma environment? I would say no. But it's much more likely in negative gamma environment when the S&P 500 is trading on that. There's a big left skew on the Vanna model, and there's room. There's put Vanna fuel in the tank. Typically in a positive gamma environment, there's not much put Vanna fuel in the tank. All right, Pharaoh asks, what is the SPX level today? Sorry, I'm not sure I understand your question. Which SPX level? All right, so let's move on to execution now. I'm going to start by taking a look at what options traders have been doing today. So this is the hero signal in Bookmap. What this is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. The white line is price for SPX, and the purple line is the hero signal. That's hedging impact, real-time options. So this is showing real-time data. It's showing what? It's showing options trades and market maker hedging activity for this combined signal of all these forms of the S&P 500. And this is available to Spotgamma subscribers. So this is a subscription product. A rising hero signal indicates traders are taking positive delta positions. That means they are buying calls and or selling puts. Market makers take the opposite side of that, and they have to buy futures to hedge their delta exposure. And a falling hero signal indicates traders are taking negative delta positions. They have to, when traders are buying puts and or selling calls, market makers take the opposite side. They have to sell ES futures to hedge their delta exposure. They always want to remain delta neutral. And Stephen, thanks for answering that. Yeah, 4,500 put wall, 5,100 is the call wall, if that's what you're asking. And I just showed that a couple of minutes ago. All right, so let's move on now. I'm going to zoom in on this chart. We'll take a look at some setups from earlier today. So just watching the hero signal. Right around 9:55. So hero dropped lower, then started to shift higher, setting up a long around 10 a.m. Actually, there was a long also right around 9:35. All right, so let's go take a look at those two setups. Let's go back to Bookmap. Go back to ES. Gonna zoom in. All right, so the first key here is this 505 put wall. That is the SPY 505 put wall. That's a level I expected to act as support, and it's did its job. So here's the early long entry, 935, and then there's the secondary entry right around 955. Let's take a look at order flow. The volume dots here in Bookmap are showing market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. And note again, I did lose my data, so that explains this gap here. And then MBO data did not start until about just after 10 a.m. So it would have provided more clues. Maybe large traders were buying with iceberg orders before the move higher, but I don't know. So I do know that aggressive sellers were selling ES on the way down. Price touched the 505 put wall, that's at 50.69. Aggressive buyers started to come in, started to move price higher. Pullback entry to the 50.65 volatility trigger. Note during this time, the MBO data is showing that large traders were buying with iceberg orders on the way up. That's shown by the light blue line. Also, sell stop orders, shown by the rising yellow line, were helping to fuel the move higher. And then initially after 10 a.m., this is CVD, the line that changes from magenta to dark blue. That is moving higher. That's cumulative volume delta. All right, Pharaoh, I'm not sure what you're asking. Gamma notional for SPX today is 592, and for SPY it is 205. I did cover that earlier today. If you missed the beginning of my session, you can go back and watch the recording. That should be available right after this presentation. All right, so nice rally from 505 almost up to 507. So from the move to 505, price targets 506, this 50.75 large gamma 4 level, and then SPY 507. And this was as traders were taking positive delta positions. So the hero signal for the SP 500 was providing a good signal this morning for a long. $935, $955, and here's that re-entry at the 50.65 level as Hero kicks higher again. All right, so that's the S&P 500. And let's take a look at NASDAQ now. Typically for the NASDAQ, I look at the MAG 7 signal. Let me zoom out. We'll take a look and see what that is. So this is a combined signal for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. I use this for the NASDAQ 100 because these stocks make up a very large portion of the NASDAQ 100, and they're typically driving price for the NASDAQ 100. All right, let's zoom in on this. And really the first clear signal.
Stop ESH for CME sell 334.
Sorry about that. That was an alert for stops and icebergs. All right, so what I'm looking at is this reversal right here, right around 1055. We can separate out puts and calls and get a closer look at that. So I'm going to have to jump to another chart and then go back to this. So right around 1055. What this chart is showing is that the orange line is showing calls. So starting around 1055, traders start aggressively buying calls. Before, they were generally selling calls, and the blue line is showing puts. So a falling blue line showing they were buying puts. Orange line show they were selling calls right around 1055. That reverses. Traders start selling puts, buying calls. Now, of course, price had already started to move higher. So let's go take a look at NASDAQ. So in this case, this was a lagging signal. It was much better confirmation for the NASDAQ yesterday. It typically is. So let's go take a look at NASDAQ now. Floyd's Garage asks, what is the light blue line? If you're talking about the light blue line in the subchart, that is iceberg orders. Light blue line, iceberg orders. Yellow line, stop orders. That's part of the MBO bundle. That is this is the subchart indicator. There's also an on-chart indicator. And in the subchart, I have both of these lines in sum mode. So I can see the cumulative stops and icebergs from the time that I opened Bookmap. And again, in this case, it was not my usual 6:40 a.m. It was 10 a.m. because I had to restart Bookmap. Oh, let's see. All right, Floyd's Garage. This is VWAP, if that's what you're asking. All right, Anurag asks, how do you know there's going to be a rally? First of all, I don't know that there's going to be a rally. I assume that for example, for the SP 500, I assumed that this 505 put wall would do its job and act as support as expected. And then I was watching both Bookmap and also the hedging flow on Hero to confirm what I was looking for that setup. So it's a combination of looking at the levels in play and then confirming how it's going to react in both Hero and in Bookmap. So that doesn't necessarily mean I'm going to put it in order at 505. I may wait for confirmation and then take the first pullback as I see the order flow shifting bullish and also the hedging flow shifting bullish. So I don't know for sure, but I think that's that's how I approach it. All right, so let's go back to NASDAQ. So we're looking for a move higher right around 1055. Let me zoom in. All right, so I know, and just looking at using Hero as a confirmation, I already know that NQ was making a series of higher lows. CVD moving higher. You can see these pullbacks. Magenta dots on the way down. Green volume dots on the way up. And then this is when the traders started aggressively buying calls in the Mag 7 stocks just above the 435 level, and price moves higher, breaks out of this consolidation. All right, so that's more of a confirmed setup. All right, so Anurag, I hope that answers your question. Again, I'm just not blindly putting in an order at 505. I'm watching. Now, when I'm trading, I have multiple screens. So I'm watching Bookmap on one screen, trading platform on another, and the Hero signal on another screen. So I'm using all that information to make a decision about when to trade. All right, so there was a long entry in NASDAQ this morning. Again, trading in a very narrow range. This is what Spotgamma has been calling for all this week. Narrow trading range. Typically, more opportunities in single stocks. So let's take a look at some stocks. And the first was Google. Short setup, quick drop lower in the morning. Google typically does not have a huge trading range, but it's worth taking a look at. Let's go to Google. I'm going to change back to the total signal. I'm going to have to shift. The reason I'm shifting to one chart to another, there's a bug still in Hero. When you shift from puts to calls, it does this auto zoom thing. Anyway, this is showing traders taking negative delta positions just a couple of minutes after the open. Price moves lower. They continue to take negative delta positions until about 12:20. Now it looks like they have started to take positive delta positions, and Google is consolidating. So from the open, traders taking negative delta positions. Oh, my Google thing is responding for some reason. Heard somebody talking. All right, so that was Google. A couple points of movement. Then traders have taken their foot off the gas with the negative delta positions and price consolidating around 136. All right, let's take a look at Meta. Meta typically moves. All right, demo trader says on NQ there, looks like Bruce's flag pattern. Yeah, so in the morning, yeah, making a series of higher lows. All right, here's Meta. Quite a bit more range today in Meta. That's pretty typical. All right, let's go take a look at Hero and see what options traders were doing. Let's go to Meta. And initially, traders were taking positive delta positions. That lasted about 10 minutes. They started taking negative delta positions. and price started to move lower. This is a very typical pattern. Aggressive buyers or sellers in the morning, somewhere mid-morning to around noon or so, they take their foot off the gas and price consolidates or moves a little in the opposite direction. Let's go back to Bookmap. This is also very typical for Meta. A short, very fast burst higher right at the open. Traders aggressively buying calls. This quickly exhausts, setting up a good short. Let me zoom in on this. And Stephen, there's more flag patterns. Pullbacks to a trend. Short entries. All right, so there was Meta. If you're very fast, you could have caught that move up. I'm not so fast. This short was better. All right, the next stock. So we've looked at two bearish stocks. So in the morning, Tesla was bucking that trend. Nice long. Note all the green volume dots.
Iceberg ESH for CME by 690.
We'll go take a look at that. That was ES iceberg buy in just a minute. Let's take a look at Hero for Tesla. Go to Tesla. I should have shifted back to puts and calls. Go back to Meta. So you can see at Meta they were mainly selling calls, also buying puts. Call sellers much more aggressive. And this can happen when traders have been buying calls repeatedly over a period of time. The implied volatility increases and it gets to a point where options traders would rather sell the higher volatility than buy it.
Iceberg ESH for CME by 300.
Another buy. All right, so Tesla, just the opposite. Traders buying calls today. That's shown by the rising orange line. Note 200 is the key gamma strike in the call wall. Tesla trading above that in the morning as traders were buying calls. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Again, here's this typical pattern. Aggressive call buyers up to about 11:30 take their foot off the gas, and Tesla consolidates. The long entry was just after 9:50 as traders resumed buying calls. And for a brief period of time, they were selling puts as well. So in that short period of time, about 15 minutes or so, the blue line and the orange line were moving in the same direction. That's a very powerful directional signal indicator. All right, let's go to Bookmap. Here's Tesla. Let's zoom in. Price reversed higher at the 199 level. Get entry point there right at 200. Call wall, key gamma strike. Note that is a call wall breach. When a stock trades above that call wall, those stocks, those calls that, located at the 200 level, that's the call wall where most of the calls are located. Traders are long calls, market makers are short calls, As those calls go further in the money, their delta is increasing, their short delta, and market makers have to continue to buy stock to hedge their delta exposure. So that can help to fuel a rally higher with a call wall breach. And again, note all the green volume dots. Aggressive buyers buying up Tesla as traders are buying calls as well. Pullbacks to round numbers. Multiple entry points. All right, so that's Tesla. Let's go take a look at ES. There were a couple of iceberg alerts. All right, so this is interesting. So we're here in the subchart indicator. This is showing two large iceberg executions. That's what's shown by this number here. So that's showing 4,471 contracts, two executions, exactly what is shown on the line below. 4,471, that's quite large. Very nice long entry confirmed by iceberg orders. Trend break, reversal higher at the 5065 volatility trigger, noted as support in the Spotgamma AM founders note. Let's take a quick look at Hero and see what options traders are doing. I'm going to go back to the total signal, go to the S&P 500. Hero signal is shifting lower, so that looks like that was Anurag says I longed at 44.77. Oh, he or she means 50.77. All right, CWR asks, so those icebergs want to be filled on the buy side. Yeah, those were buy iceberg orders. Let's go back to Bookmap. So it looks like they came in. So first of all, iceberg orders are they are CME order types for CME futures. So that's an actual order type that, again, large traders use to hide their size. And Bookmap will detect that. This is the in the MBO bundle. That's an add-on to Bookmap that shows stops and iceberg orders. Again, those are both specific CME order types available in MBO data, market by order data. Rhythmic is the only data provider that provides that data, again, for CME futures. The Bookmap add-ons on chart and subchart detect those orders and show them as they're executed. Again, this is quite large. 4,471 contracts. You know, those are buy orders. All right, so let's watch this and see what happens at the 506 level. And by the way, if you are interested in trading this the way I trade, and Bruce has asked me to talk about this, this is the basic basic trade control panel in Bookmap. And of course you can, I'm in simulated mode right now. So when I reopened this morning, I did open simulated mode. But you can link Bookmap to many brokerages and trade on your actual brokerage account with Bookmap. But I'm in simulated mode. Let's go take a look at Hero again. Looks like it may be shifting higher. And you can also use brackets here in Bookmap. And there are much more sophisticated ways to trade now that I use for futures. I use Trade of 8, and I typically use their own trading platform and DOM. That's just what I've gotten used to. Just looking to see if this is going to be a pullback or if it moves back down to 50.65. So really the only thing supporting along so far was the reversal at 50.65. CVD continues to move lower. Stops move lower. Price is right at between VWAP and this 506 volatility trigger. Let's go back and check Hero. All right, so now Hero still making lower highs. So it looks like ES may be headed back down to the 50.65 level. So if you wanted to place a short, oops, yeah, I'm a little bit late. If you wanted to place a short, what I do is if I want to trade 2 contracts, double click. So again, I'm a little bit late. So once that is filled, then I could move the take profits to wherever I wanted. All right, so that's just basic trading in Bookmap. Cancel all. I'll check with Bruce. Maybe he wanted me to show some more information. All right, so just watching this, Signal here, trend break, very large iceberg order, but there's really no follow through. And I confirmed that with Hero. So based on this, I was really looking for more of a short. A reversal at the 506 level. Again, because no follow through and the Hero signal was trending lower. So this little move higher, did not even show any. That was not a stop run. No response from the yellow line. So now in hindsight, that would have been a good short. All right, Slow to Rise Z asked if I checked Apple today. Let's take a look at Apple and then we'll wrap it up. So if you remember from yesterday, Apple jumped sharply, I think right around 2 p.m. as they announced that they were shutting down their electric vehicle project and going to shift their workers to artificial intelligence, AI. And that would cause a pretty sharp rally in Apple, and today Apple is selling off. Let's go take a look at Hero for Apple, and then we'll wrap it up. All right, so for the day, traders have been taking negative delta positions in Apple. So selling calls and buying puts. Let's take one last look at Mag 7. And that started rolling over right around 2 o'clock. And NASDAQ making a double top, slightly higher lows, right around 950 and the 436 zero gamma level, back down to 435. And here, this order flow to me was much more clear. CVD moving lower, stops moving lower, icebergs moving lower. So in this case, this afternoon, this move lower was an easier read for me. Aggressive sellers, CVD dropping, stops dropping, icebergs dropping. All right, everyone, I want to thank you for watching. Thank you very much for your questions and comments. And I will see you tomorrow. Remember, PCE data comes out 8:30 a.m. Eastern Time. Could be a market mover, and we'll talk about it tomorrow afternoon. All right, thanks again, everyone. Have a great afternoon, and I will see you tomorrow. Bye.